Hello and welcome back to the Real Estate Investors Club podcast. Today we're here with JP. How's it going, man?
Awesome. The best place to do a podcast. We're actually live from Cancun. So yeah, pretty cool.
That's right. So exactly what event are we at right now?
It's an event that's been held at the club for the past 10 years. I don't know exactly how many we did, but it's actually called the Millionaires Week, the Millionaire Spirit Week, where we gather hundreds of investors. Last year, actually 2020, we were more than 200 with the charter planes, real estate investor flying to St. Lucia. This year, we're a bit less, obviously, because of COVID restriction, but we're more than 100 people here today in Cancun, Mexico at a 5-star resort. So that's pretty awesome.
Yeah. And it's so fun and motivating to be surrounded with like-minded individual. Everyone here is a real estate investor, already has properties and deals under their belt, and we're sharing techniques, contacts, and it's motivating on the mindset. And I know that coming home, all of us will be so cranked up to really start the year of 2022.
Absolutely, and big players also talking about everybody's having real estate. We're talking big players sometimes that are at the Millionaire Week, and obviously there's some classes that are given, so you learn a lot of stuff. So basically, it's always paid like a coaching. Basically, it's always paid for the tricks and the networking.
Absolutely. And so we were talking a little bit earlier in the year about continuing with the great podcast of the Real Estate Investors Club. And we've decided to start twice a month to kind of do a section that we're calling as a joke, and it's serious. What is JP up to? Because at least for me, I look up to JP. He's been a bit of a mentor. He's a really good investor and further down the spiral of real estate investment. And I kind of wanted to, in a way, like pick his brain and share with everyone, like, what is JP up to? Because I think all of us have something to learn from your success. And I really mean that. And so, in today's episode, the idea is to kind of go back over the year 2021 and see, like, what was it like for you?
Thank you very much for sharing this. Yeah, that's kind of weird because normally I interview people.
Yeah.
Now I'm getting interviewed, so I'm not talking about myself too much. I'm not used to that, but yeah, it's been a great year. Honestly, well, for those of you who own real estate, who bought real estate last year, it was a perfect timing where the rates were really low. Also, values were going up. We're talking about a great year in the real estate world, 2021, and obviously 2020. So it was a great year.
Mm-hmm. And so you were able to do a number of transactions,
Yep.
some smaller, some larger. Can you just kind of give us an idea of what overall, what did you do in terms of transaction? And then maybe we can take one or two and go a little bit deeper into it.
Absolutely. First thing I'm saying in the class is that real estate is a marathon. So you're aiming of having, I don't know, 1,000 doors in 20 years. Well, probably the last 500 doors, you're going to buy them in the last year or the last 2 years of that journey, because it's exponential. And I had the fun of doing it. Basically, I put it in the graph and it exactly matched an exponential curve.
Mm-hmm.
Exactly an exponential curve. So basically, I doubled the portfolio in the last 3 years on my side.
Wow.
So that's an exponential curve where you get better relation, where you get better financing, your reputation is better. So it just goes so smoothly. So the first deal is Mount Everest, and the other ones are smaller and smaller. So we're able to double our portfolio. Basically, we bought in the last 12 months, we bought $26 million of real estate.
Wow.
Yeah, so
just in the year 2021?
Yes, absolutely. December to December. Yeah, December to December.
Oh, wow.
Yeah.
Okay. And so this 26 million of assets, like roughly how many transactions? Because I'm sure maybe in there's some 16 unit buildings, and then there must be some much larger ones. So what does that look like?
Yeah, it represents about 140 doors in Montreal, more or less, for 26 million. There's a portfolio that we bought. It's actually 5 small buildings, so 6 units and 8 units, but it was all together. We bought also a 2023, we bought a 36, we bought a 15, we bought a 57, So that's about it. So that makes about 4 or 5 transactions.
Wow, totaling 26 million. Okay. And as you said earlier, like it's exponential. The more it goes, the easier it gets.
Yep.
And it's also that you also have access to bigger and better deals.
Yep.
And so, as we're going to be kind of dissecting your last year's success over a few episodes, like one of the things I wanted to start with was to be able, how did those deals come about? Where did you find them?
That's a very, very good point. Okay. So I'm just going to talk about the last deal I got because it's a very good example. In a building, you can buy everything at Rona or whatever you're buying, BMR, but you can't, in the real estate world, you can't buy your name. So you must protect your name because you can't buy another name. And in that transaction, it was listed 11.5 million, the transaction. And there was a promise to purchase at, I think 9.5 or 9.6, and the transaction fell through. So it didn't go through. So the broker called and he said, JP, here's the transaction. It fell through. Do you want to do it? And the reputation as a closer needs to be there. You need to be serious. I mean, I'm all about making promise to purchase. So that's very good. But once you commit, you close. And imagine if you're a broker, you just end up with a listing, the first thing you want to do is get rid of it and get a commission as soon as possible. So the easiest way to do it is to give it to somebody who's going to close. So you need to have this reputation. So when they send it to me, actually I want to bid against another one that bid higher, but the broker says, well, JP is going to go get through the transaction no matter what. And that's what I did. And we got the transaction in December. So reputation needs to be AAA as a closer, and it's a small world in real estate, and your name's gonna go around. And if you're not a closer, then broker's not gonna sell deals.
And they're not gonna maybe give an advantage to your offer, even though it might be a bit higher, a bit lower. But if you're identified as the one who's going to be able to take it all the way to the notary and not waste 3 months of everyone's time, there's definitely value into this.
Absolutely.
Yeah. So, okay. So it was brought to you by your broker, roughly. So you said around 9.5 million. Can you just kind of give us a breakdown of how much you needed to raise to bring as a down payment, how much you got financed, and roughly like how long did that take?
We did a kind of a special loan, and that's another door that's opening. Like I said, when you got bigger deals, you get bigger financing deals because the file fees or the fees to make a loan is actually the same for a $500,000 loan than a $5 million loan, but the lender is making way more money on the 5 million because the fixed fee, that's the word I was looking for. The fixed fees are the same.
Yeah.
So that's why it's interesting. So basically we ended up making a syndicate loan with Banque Desjardins and a private lender and raised money as well for the renovation. And basically we use refinancing money from another project to chip it in on the project. But the financing is almost total because we're using the money that was stuck in a project, and then we're going to shoot it into that project. So basically we're just running the same money over and over again.
You just recycle.
Exactly. Exactly. And you reduce the down payment. So that's what I'm saying. When you get into the bigger loans, you get some bridge loans, and that's really interesting. The bridge loans, they know the bank that the economic value versus the market value doesn't make sense anymore. So there are some banks that are taking advantage of this market, and they're going to charge you like between 5 and 6% interest rate as of January 2022. They're going to charge you 5 or 6% for interest only payment. So you're just going to pay interest. They're going to give you sometimes a little bit of money for the renovation, and most of the time they're going to lend you 75% or 80% of the property, almost regardless of the current rents, because they know that you're going to renovate. And again, having a good track record of doing project like this and going to the end, so showing up and bringing project until the end will bring credibility to the table for these kinds of loans. So we're talking about like minimums, we're talking about like $1.5–2 million loans. This is where the doors open for bridge loans, which are temporary loans. So that reduces the payment a lot.
And in this case, the bridge loan is, just to get an idea, it's a 1 year period. Is it 2 years? Because to be able to start to optimize a portfolio of 60 units and then refinance it, I mean, it still takes a fair amount of time.
Absolutely. Absolutely. Good news is, as of January 2022, the delays from the CMHC are quite short.
Yeah.
But problem is that the delays were long, then they put it short, so they've pushed everything to the bank. So there's a bit of delay to the bank. But we're aiming 57 units. We're aiming about a year plus financing. So we're talking about a year and a half. So more or less, bridge are gonna be like 6 months to 3 years, and they're probably and most of the time there will be 6-month firm, like fixed, and they're gonna open the loan for, let's say, 24 months. So it's minimum 6 months, and then open for the rest until 24 months or 12 months, whatever.
And as you said, like the bigger it gets, in a way, the more flexibility you have. So that's really encouraging on your side, because you know that either way you'll find a way out.
Absolutely, exactly. So yeah, you find a way out, just I know bigger is better. Everybody's saying this, I know, but as a teacher, everybody's like, you should go big, it's easier, it's the same trouble. Yes, if you can go bigger, but you need to learn at first. I mean, if you go to a $10 million loan at the bank and you have no experience, there's good chance that you're going to be refused. So you can get credibility by bringing another partner, which is at this level. So that's a possibility. But other than that, you need to learn. Like if you ask students that are finishing high school, they're gonna say, "Well, just go to the last year of high school. You're gonna learn everything." But yeah, you need to learn before. You need to learn to read before you get to that point. So that's important to go small and then learn, and then you'll go big.
Absolutely. Okay, so then now we've talked a little bit about the financing part. I'd love to hear a little bit also about the due diligence, because on buying a portfolio like that, as you said, like there's a number of different buildings in different areas of town. I mean, it doesn't mean you have to visit every unit and see every bathroom, but can you run us through, like, what did that look like? Did you do it yourself? And most importantly, what is it that is absolutely critical for you in doing your due diligence? Because there's always surprises. It's just, how do you assess, like, that's a surprise that I can't handle versus this is a deal breaker?
Yeah, well, again, if you go in the bigger units like this, I mean, I know we're not going to visit all the units. Okay, so it doesn't at one point, it doesn't make sense. But the risk is acceptable, meaning that there's one apartment that's a bit less renovated, or you need to change a bathroom. At this level, it doesn't change much. So you look at the units in the corner. So that's what I like to do, like upper floors, corners, because you're gonna check the roof, you're gonna check the brick. Also in the basement, always check the units in the basement, so that those are important. So you try to get that. If you're doing a visit and inspection, well, try to visit different units. So that's another tip. But the major points which are a no-go: environmental test on the soil. So that's really, really important, because it can cost a lot of money. We can discuss that on another podcast, but I did the contamination. And it's a matter of hundreds and hundreds of thousands of dollars. So that's a no-go. So if you don't have a clean soil, you don't show me a report of a clean soil, I'm not gonna buy. And also with experience, when you start visiting a building, you already know the attention and the caring to the building that was done by the owner. So you'll feel immediately if it's a crappy building or if it's a good building. The best building there is, it's actually the ones it's actually the type of the ones we bought in the portfolio of 9.2 million, but it's an owner that took care of the buildings but never renovated. So he took care of things. So there was water infiltration, they're going to change the bricks. There's going to be problem with the windows, they're going to change the windows, but they're never investing in improving the unit to rent it higher. But you know the building was in good shape, good care, and they repair the problem all the time. Another transaction, the 36 units we bought in April, that's the opposite. That's a building where not a single dime was put in, and we knew right away that there was going to be problem with every single thing. And we opened a wall, and then the plumbing, the fixture was almost with duct tape. That's exactly the type of building that you have to be careful. So you feel it in the building, the kind of tender loving care it received over the years.
Yeah. And at the same time, all this deferred maintenance creates an opportunity, because as you said, this is where you can go back into it. The envelope of the building is sound, but then you can go in and renovate the bathroom, renovate the kitchen, repaint, and then you can rent for much higher, which creates that leverage for you.
Exactly. That's exactly the operation that we're going to do. So when you have a good buildings, when you don't have to touch the electricity, the plumbing, the roof, the brick, that's all very, very costly. So you don't have to put too much capex in the building. You focus on the units, and then boom, it exposes the value.
Yeah, well, that's clearly what you've done this year. I'm actually quite amazed. 26 million in 2021. That's quite the performance. Congratulations. Just in a nutshell, what's your objective for 2022? You knew that question was coming.
Absolutely. Actually, we're refinancing 3 projects, so we're in that manner now. We have over 70 units to optimize, so that's a lot of job for the team. So basically, we're gonna do this. We're gonna focus on buying probably in September, but I'll be very, very stiff on the transaction, because I know if I'm saying yes to 8 units, 12 units, I mean, on my level, okay, for full disclosure, but I'm not gonna say yes, because if I say yes to a 12 units, my bandwidth, my focus will be on that unit. So my prediction, and I'll re-listen to this forecast, is that in September, it's probably gonna be close to 100 doors in one shot, because this is where we're going.
Yeah.
So it needs to be close to that, maybe not 100, but maybe in between 60 and 100 units that's going to be bought in September. But focus now is refinancing, because the rates are going up, so you want to clear these financing as soon as possible, get a good deals in regards with rates that are going up.
Yeah. And as you said, with everything that you've purchased, you already have quite a bit in the pipeline to have to stabilize.
Yep.
So maybe just to focus on that
Absolutely.
a little bit.
Yep.
And then once that is a little bit, further down the pipeline, then you can start your acquisitions again. Wow. Well, thank you very much for sharing all this knowledge, JP. It's very appreciated. And as always, please like the podcast, share it, send some comments, some questions. It's always appreciated, and we'll do our best to respond to all of it. So thank you very much. And lastly, from now on, every Wednesday at noon, you can join the Facebook Live of the Real Estate Investors Club, and you can join us and get some more information. So thank you very much, and we will talk to you next week.